Hi and welcome to Matrix Moments. This is our first podcast from 2021, and we've all just returned to work, and we've had a test before coming back into work. So, if you guys are okay, I'm going to take off my mask and continue the rest of this podcast.
Sure.
Yeah.
I'm not going to take off mine.
I have the antibodies, so I'm pretty done.
Happy New Year.
Happy New Year.
Happy New Year.
Rajat, welcome to this. Last year, we actually did a look back to 2019 podcast with Amish, Tarun, and Vikram, and it's great to have you on this one as well. We thought we'd do the same, look back to 2020 and look forward. In many ways, it's been a crazy year, unprecedented in many ways. And through that, we've actually had a very busy year at Matrix. Initially, there was a very strong focus on portfolio. Then there was a lot of momentum around new deals. We've actually ended up closing the year with 15 odd deals, and that's keeping in pace with our investment pace from 2019. There are 2 new unicorns in the portfolio, more than 15 odd follow-on financings. Frankly, it's been a much more busy year and somewhat better than initially feared. I guess I'd like to start out by just calling out some themes that we had spoken of last year, which fortunately we saw play out in 2020, and then I'll come to some that didn't. I guess the first one is the fact that the experienced founder cohort kind of arrived. We've been speaking of this for a while. Many founders who've been through successful company building journeys at some of the leading startups had begun spinning out and starting their companies in 2018, 2019, and that trend only accelerated in 2020. I think the second big thing that we spoke of was the market depth was really going up, and we were beginning to see real companies with real revenue, real business models, and a path to profitability. And a lot of that has actually accelerated in some part, due to COVID. I guess the third big trend that we spoke of last time was the accelerating adoption of tech across SMBs, which again is a theme that we've been betting on across multiple sectors. That played out too. A fourth, and I'll try and keep this one short, is we spoke of this whole increasing, tech capturing an increasing portion of the incremental GDP versus tech capturing and disrupting existing GDP. And our view was that the latter was actually more interesting to play in. And in many ways, that's actually played out. GDP actually contracted through the year, but tech has only accelerated. So clearly, it's about capturing existing GDP. And then a fifth, and it's a bit of a prescient call. I don't know if you feel good about it, but we thought about the fact that we were coming towards the end of a cycle, that there was a little bit of a bubble, and that 2020 would be that year where the cycle would turn and the new cycle would begin. Which brings me to the things that we didn't see.
So we predicted a crash, but we were precisely wrong about everything about the reasons for it.
But we also said we don't know the triggers.
Yeah.
So I guess none of us saw the health crisis that hit society, the economy, every company around us. And then I guess none of us saw the follow-on and knock-on effects on the funding environment and frankly the exits environment. So I'm going to kind of stop with my preamble. I think the question I have for each of you is, what were your memories of 2020? And when you look back, like what do you remember?
My first memory
COVID, so
was,
maybe you guys should start.
Yeah, so I was just thinking,
I can
start with the people who got COVID.
yeah, most of got COVID.
I say this in jest, but I was almost, I think, the first person that pretty much everyone I know told me that you're the first person I know who contracted COVID. So back then it was extremely sort of a time of high anxiety. In hindsight, I think I was fortunate that it wasn't as bad as I thought. I think the anxiety or the stress around anxiety was worse than the disease itself. And Avi and Vikram and a bunch of colleagues at Matrix were helpful because I think the trigger to get hospitalized in that moment and doing it early was clearly the right call. But it was crazy. I mean, I remember we put like 20 calls to get to the hospital. Fortunately, as I look back, it almost seems like it was ages ago, right? And I just got myself tested yesterday, and thankfully still have the antibodies. So it really seems like it was a lifetime away because so much has happened this year. I think the memories, the big ones I hit upon. One was, I think for me, the most heartwarming part was the initial part where I think all VCs, a lot of portfolio founders and other startup founders got together and came together to set up Act. I remember how quickly it was done. It was this one weekend phone call that some of us sort of took the initiative to organize. And very quickly, it just kind of took a life of its own, became much larger than the initial scope. And all of a sudden, I found myself spending like half my day on Act and a bunch of other things. So honestly, very, very heartwarming. Towards the end, I took a step back, but a lot of good work by everybody involved. So that is clearly one big memory. And I think it just brought together a lot of people that we don't get to work with each other as much as we would like to. So that was a big memory. I think for me, the other was just, I remember all the portfolio triages we did right at the beginning of COVID. Very often, I would question myself whether we are overreacting, whether we are pressing the panic button too early. But I think in hindsight, overreaction was probably the only reaction and the right reaction because it really helped people get clarity in terms of what they are doing. And honestly, for me, it was just a reminder of the resilience shown by founders. Literally 2 months ago, they've raised a new round of financing, gone all out, made a bunch of offers, looking to expand the team, accelerate, and all of a sudden, pressing the brakes and sort of almost recasting plans from scratch. So just seeing that to me was just amazing to see that resilience and the effortlessness with which they were able to change this. So I'll stop at these two, and I'm sure there's a lot more examples of people.
No, for me, the first reaction that I remember was it was just so unnerving because at least I hadn't seen a full-blown crisis, forget a health crisis, any sort of crisis before this. I was very young in 2007 when the last crisis happened, probably my first job back in the day. And initial few weeks, I just didn't know how to react. But slowly and steadily, I think things did pan out way better than what we had initially thought. And kudos to the portfolio. Echo Tarun's thought that I think a bunch of portfolio companies saw very extreme reactions in my extreme situations in my view as well. So there were some companies which had dependencies on physical infrastructure or lending companies, a bunch of lending companies in our portfolio, which were affected very badly on both supply and demand. While there were lots of others which were almost seeing a massive tailwind, whether it's the payments companies or consumer brands or digital first companies in a way. And both sets of founders had to take very different actions. Someone had to almost figure out how do I survive and live to fight another day, while the other guy was facing a once in a lifetime opportunity to really grow. And it was just remarkable how founders really navigated some of that. I would say still some people navigated it better than the others, and we saw that in the portfolio, outside the portfolio. It was almost like whoever took the bull by the horns early and realized that this is it and I have to react. Those guys just ended up doing much better, and some companies turned profitable. It was just very, very interesting to see how it's all panned out.
So I would say 2020 for me, the overwhelming feeling is one of gratitude, both professionally as well as personally, on how it went for me personally as well as sort of all of us. I think we're just lucky and privileged that it sort of went our way, and so I'm just thankful for that. To me, I remember getting off the plane along with Avi and Tarun one day before the borders shut, and
this is where Avi told us, now you realize the meaning of the word risk. I remember that line.
Yeah. And I remember landing, and I remember recalling a conversation with a much more experienced investor, and he said, if in a crisis, the person who hits the crisis button first and generates lots of options will then be able to navigate it. And I think that's what we did. We hit it first and hit it hard for us, for the portfolio, and that helped generate a lot of options and scenarios. And it truly has ended in the top 5, top 10% scenario for us at the end of 2020, and that's why we're thankful and grateful. But overall, I would say the companies really discovered their true character through 2020 and discovered their mettle. One, companies discovered grit. Some people everybody had to make the hardest choices, whether it was low burn, whether it was a pivot, whether it was letting their people go. It was just a bunch of hard price choices, and the ones that actually worked through them the best flowered. The second was inordinate focus on profitability and unit economics. And I almost feel like once they've discovered that habit, they don't want to move away. Even after they've raised rounds through the year, I think that habit is sort of here to stay. And the last is COVID was an accelerant for a lot of companies where consumers started pulling towards those companies. And again, that's a habit where we were used to high CACs, cashbacks. That entire environment went away, and I'm hoping that habit is also sort of here to stay. Lastly, I would echo Tarun's thoughts as startup ecosystem sort of matured and really came together. And there was this empathy that we're all in it together. And I remember the first month, there was a group of fintech founders, there's a group of consumer founders, there's a group of logistics founders, and it was all of those founders against the world with each other. And some of that carried on through the year. I still remember we did this fintech, State of the Fintech in maybe mid-year, September.
Mid-year.
And every fintech founder was forthcoming with their time just to help others think through moratorium, think through KYC, think through how they're dealing with payments. And I'm hoping that also continues, that if those relationships that were formed, I think people are still leaning on those relationships as we come through that time. So that was 2020 for me.
Yeah, I would just add, so I think gratitude is the right word, and in some ways feel uniquely, but almost feeling guilty about being in that position, given everything that's happened in the world, right? Because I actually, when I see people saying get good riddance to 2020, of course, good riddance on a number of levels. But personally and professionally speaking, I think it'll we look back at it as a big positive inflection point, including in relationships. I think for me, since I had done some of these forecasting podcasts initially with Rajendra, I mean, everybody was just wrong about everything. If you look at the trajectory of COVID, there was this heat and humidity theory. Who knows what happened to that? India market versus US, lockdowns, no lockdowns, what works? Everybody, vaccine within a year. Stock market will crash to this is worse than the Great Depression. There was U, V, L, W shaped recoveries. There's also K somewhere in there, right? There's divergence. I thought the kids would have the worst time, kids adjusting the first. VC obviously did well. And I think one learning we should all take away from that is how poor forecasting is. And by the way, you will never hear, in my view, people going back and looking at this and saying how wrong everybody was. Because forecasts change dynamically and organically, and people just adjust it to be truly 2020, pun intended, right? But if you put yourself at that time and make decisions based on that, I think you just have to do your own stuff. So this is the fourth or fifth or sixth crisis I've seen, and this was probably what people got the most wrong amongst the ones that one has seen till now. But overall, gratitude and privilege.
Yeah, echo the thoughts. Vikram, Tarun, both of you actually spoke a lot about the VC ecosystem actually coming together. Can you speak to what was the reaction across different stages, both across say early stage investors, angel investing, later stage investors? How did people react when dealing with their portfolio companies, when evaluating new opportunities? Because initially there was just a lot of fear, but it seemed to have kind of eased up through the year. What was the narrative within the VC ecosystem?
So I think it started with almost everybody just hitting the pause button, like Vikram said. Hit the crisis button the fastest. Take time to evaluate sort of portfolio impact, take time to figure out which companies will be fine and will have the staying power, and figure out which companies may be in trouble, so that if you need to set aside additional financing for those, you're well prepared and sort of know how to plan for it. I remember for the first 2-3 months, pretty much every other investor, either they are co-board members with us in some of our companies or just part of regular catch-ups with some of them. Pretty much everybody was saying, hey, you know what, we're not doing anything new right now. We just want to wait and watch and see sort of how this plays out. And then I remember, so that was phase one, where everyone was just busy with portfolio. Phase two was, I think, where we spoke about this K-shaped recovery, where it clearly became a story of haves and have-nots, right? So in sectors which started seeing a COVID tailwind, EdTech, gaming, SaaS, a bunch of other sort of verticals, all of a sudden you could see large financings, very fast, sometimes multiple financings in the same companies, kind of, rising tide lifted all the boats, right? And then you had the other side where even quality companies in certain verticals where it's impacted negatively with COVID, basically just had to ensure that they create enough runway to ride it, right? And I think that's part of late stage capital, Jio included. It became clear that while COVID is a tragedy at many levels, when it comes to digital adoption, it's actually really sort of accelerated the curve of adoption. And we saw it in data with the US, and there's that famous chart which talks about change in a few weeks versus change in the previous decade. But we already, I think, on the ground, we were feeling what was happening in India, right? Every day on my family WhatsApp group, there was a new link of some new guy selling fruits and vegetables, and you'd click on it, and there was a digital catalog, and you could order from there. And my mom was suddenly figuring out how to use Netflix and Amazon Prime for the first time. And so we could see that there is just a lot of organic sort of adoption happening. And I think that's when we started seeing the next cycle of innovation come in, which is consumer brands, new social and media companies looked at a bunch in commerce, social commerce. And so I think my sense, and you spoke about September, October timeframe, I think that is where at least I felt not only we continue to remain active, but a lot of other investors started looking at new opportunities with a very different lens, saying that, okay, we know now broadly how COVID has played out and is likely to play out. Now, what are the next set of bets to take? Vikram, I don't know if you want to add something.
So I think from an investor mindset perspective, when something this big happens, it just explodes the number of unknowns and the risk that you're seeing. So you go to a place of fear, and in a place of fear, you're looking for familiarity. And I think that's where everybody drifted, which is people they are familiar with, sectors that they're familiar with initially, and started making some investment decisions, right? I already know this person from before, so I'm more comfortable investing that person over video. And I think that's how it started. And in sectors, somebody like EdTech, somebody like SaaS, and so you were essentially looking for familiarity. I think like Tarun said, there was at some point of time, we started looking at COVID tailwinds, and that led to a new set of investments being made. And for me, what was heartening to see in that set of investments that we made, others made, is that there was a very varied set of entrepreneurs that emerged. Small towns suddenly emerged, both in SME tech, in agri tech, and health tech, and so on. Where it was a very different set of entrepreneurs that started emerging, and I think they're here to stay. And the second is a varied set of GTMs that we suddenly started learning about and started believing in much more, which were either content generated or there was a virality to them because they were on our moms and grandmothers WhatsApp groups and they were getting shared, and there were these farmers WhatsApp groups and farmers communities where they were getting shared. And I think that's also here to stay, where there is an appreciation for very different GTMs and ideas to grow.
One of the things Vikram just mentioned is about knowns versus unknowns and the fear and greed, right? So a lot of the tailwinds became obvious, at least in India, post-July. Maybe Zoom and all a little bit in April, May, June. But I was blown away by what Jio did in April, May, June. The fact that they got, and not just that they managed to raise $20+ billion, but the Facebooks of the world actually invest. Then I don't know if you guys recall, there is this quote by Brian Chesky saying, "It took me 12 years to build something that has gone away in 12 days, something like that, or 12 weeks." About Airbnb. Today, I don't know what the market cap is, but hopefully close to 100. And Silver Lake invested in Airbnb at an $18 million pricing. When nobody, I mean, people would have thought this is never coming back, right? And I was just reading some report over the holidays about simple analysis that they did, that people over the previous year search more for Airbnb in Google than for Hilton or Marriott or whatever. That doesn't go away in 12 months, right? And it reminded me of what Warren Buffett did with Goldman Sachs in the GFC. So I think personally for me, that's been actually a big learning, that some of these, I remember him saying that, end of March, I backed up the truck into HDFC. Like pick two, three
of the top.
Pick two, three of the blue chips, right? And I think even the seasoned investors get fearful. Right? I mean, Warren Buffett didn't buy it. He thought it was just too frothy or too uncertain. But I think that was the other big takeaway for me. There are people who played offense. So Jio played offense. And then when the tailwinds behind some of the tech companies, and when the tailwinds became clear, a lot of people jumped in on defense. So we are hearing about other large industrial houses now looking to play the internet and buy. But I think that was the other dynamic that played out, which hopefully I'll try to remember the next time.
Yeah, I think we also saw a lot more. One is, of course, just syndication went up. The other is, I think, a lot of later stage investors suddenly saw things taking off and they started coming in earlier. I think there are multiple changes. Of course, Jio, then the emergence of a local M&A market. I think there were a couple of marquee transactions that also happened this year. I'm just wondering, a lot of this is positive for the ecosystem in general, and so I'm curious to hear what you all think. What are the trends and what are the learnings from 2020 do you think will carry forward into 2021?
I'll take a shot at that because I think it's a little bit of a contra view also. One is this experienced founder that we have talked about. They used to be the exception. They used to be the 20%. I think now they'll be the 80% because everybody is getting exposure somewhere or the other. And I think so I guess the contra point there is it's no longer going to be a novelty. Everybody or most founders will be experienced founders. So now we'll maybe talk about the inexperienced or the fresh out of college founders. I think the rest, one of the things I'm waiting to see how much it gets internalized is how bigger the Indian internet companies have been built on the back of, and fintech and starting with Naukri, on the back of feet on the street. I am waiting to see if people realize and internalize that you can do it without feet on the street now going forward. And I think video, because of COVID, has been such a big inflection that even that guy in tier 4 cities now used to. And TikTok we have discussed in our other episode. So I'm waiting to see if that happens. That would be very interesting. But I will tell you that my view is we are not done yet. Just in terms of you're saying what things to look out. But I think we think we are done with COVID, we may not be. And I have a feeling that there is some negative surprise that we haven't yet figured out. And that's more instinct. It just feels too good to be true. I know the deaths in the US are pretty high, but for a pandemic of this scale, so I don't know if it is that people are already saying that post-vaccine you may not have a bad reaction, but you may still transmit. So you still need to wear masks. You can be reinfected. How long immunity lasts? What are the side effects? Whole bunch of these things. So that's a little bit of wariness I have on this particular thing, which relatedly or unrelatedly, I'm again going to say there will be a 20 to 30% market correction somewhere along the way in 21. Everything seems to be priced to be, but we can come to that. But I think in terms of macro, that is something that's in the back of my mind.
Rajat, I know you and I have chatted and you actually have a more positive view on some of the sectors that you cover and how those trends play out. What do you think?
No, so look, I think overall, if you look at the entire digital economy, right, it's got tailwinds across the board, right? Whether it's healthcare, whether it's education, fintech, again in parts, which are the sectors that I cover, but otherwise also like consumer banks or other SaaS has always been interesting. It's become much more now. It's become much more in vogue now. So there is clear tailwinds that we are beginning to see. So for example, what Avnish said that even anyone in tier 2, tier 3 cities would have tried a TikTok or would have tried a any OTT platform for that matter. Most people would have tried a UPI payment through this time. So people are going to transact more and more online going forward, which is going to have a ripple-on effect. So as more consumers come online, TAM for example, a consumer brand just grows manifold. Similarly, a grocery startup like Dealshare in our portfolio, which targets say to tier 2 audience, their TAM grows manifold. Linked to it is logistics services. Linked to that is point of sale credit. All of that is going to explode in some shape or form. Similarly, if you look at the SME side, a bunch of new sellers are coming online for the first time. So you can build lots of SME-oriented businesses for them, whether it's picks and shovels businesses or discovery businesses, and so on, like Dukaan app portfolio. By and large, I think the digital economy is going to see very positive trajectory over the next 2 to 5 years, and it's going to be across sectors. I think it's specifically to EdTech was like crazy in 2020, right? I think for some of those sectors in 2021, maybe there's going to be a little bit of a rebound to offline. Like Ketan and I were chatting in the morning that our kids are done with Zoom and they are itching to go back to old ways of their lives. So I think there's going to be some rebound that's going to happen. But I think the new normal will be very different and much higher than what it was. Because fundamentally, some of these things are truly value additive. Like, if a person in a small town is being taught by a top tier teacher in Bangalore, that's just not possible in a physical world. So I think net.
So Rajat, just sorry to jump in here because I've been thinking a lot about this with the sectors with tailwinds see headwinds, and I'll tell you a framework that may be useful for the listeners. I don't know if it is correct though, but at least it's my theory that you have to look at adoption versus adaptation. So, is it a sector which has accelerated adoption versus it is something that we have to adapt to because of this situation? I think the adaptation sectors by definition will slow down. So, a lot of these Zoom classes, my kids are like pulling their hair out, right? They don't want to do it. I think they will slow down, they won't go away. We'll probably continue to do these Zoom meetings, but the big inflection may actually result in a year-over-year decline at some stage because we'll go back to normal behaviors. Versus adoption, where adoption has accelerated. My wife I used to order at home for the entire family. Now she has her own account on the food apps, on all the UPI apps, on all the e-commerce sites, so on and so forth. That's a fundamental increase in adoption. Wherever it is adoption-led, I think it is stickier. Where it is adaptation-led, I think that's the other counterpoint. I think we'll be surprised how quickly people don't want to adapt anymore. And they want to go back to ultimately most of us have lived decades in one way and then 1 year, 10 months in another way, right? I think that memory is also speaking.
I think I'm just going to double click on that. For me, there is obviously the SMBs, the doctors, the teachers who have all started using tech for the first time and using it more. But I also think it's new personas emerging in pretty much every sector. Like if we take fintech, there are savers and investors who have come in by the millions for the first time. If you take agri, there are farmers who are coming in as social users for the first time into the digital ecosystem. So I think people have to recognize that there are these new personas which are here to stay. And then how do I actually build for this new persona? And that to me is actually sort of like the step jump that you're talking about or the stickiness that you're talking about.
Yep.
I want to go back to that experienced founders point that Avnish made, and now given that it's to this 80% might be the experienced founders, I think there's a lot to learn from how they behave, and at least for us, how we interact with this experienced founder set. For me, one was they're highly over-indexed on relationships, whether it is in whether it's in team, whether it is in who they choose as investors, whether it's who they choose as advisors. And I think there's a lot to learn for all founders from that. I think the second was the team that most of them ended up creating through COVID was one of those one person can do the work of five people type teams. And that was never possible before because the talent in the ecosystem didn't exist for them to be able to do that. I think that's the second thing that I think is sort of here to stay and what experienced founders are doing different than the others. And the last is that highly focused on that initial GTM on how they get the product in the hands of their core consumer and customer very sharply. I think the other thing for the less experienced founders is they have started surrounding themselves with the experienced founders, and the experienced founders are really giving of their time and advice to the less experienced set. So to me, it's actually everybody's experience because the experience is getting shared amongst the founders.
Actually, that's another good point, right? It's probably, and I don't know if it is COVID, how much of it is COVID or non-COVID, but it almost feels like the tightest founder community we've ever seen. With everybody kind of investing in each other, knowing each other, like you said, and COVID probably accelerated some of it.
Yeah.
Actually, on that point, one thing that's very likely to happen in 2021 is this acceleration of the angel investment ecosystem is going to be pretty much crazy. A lot of ESOPs, like even today, I think there's news that Cred has announced a buyback of ESOPs. Razorpay has done that a couple of times. So a lot of wealth creation is happening in the ecosystem, and it's all going to go back. A lot of it is going to go back to startups. So it's going to be pretty interesting 2021.
Yeah, I think there's also, for all of us in the ecosystem, I think the number of companies that are planning to hopefully go IPO is another fantastic marker of the ecosystem's maturity. And I think another big thing that changed in 2020 was some of these large companies their journey towards profitability is just accelerating really fast. And if you have profitable companies at scale with a path to IPO, with a large amount of ESOP wealth creation that's happening, hopefully 2021 should see a lot of really high quality founders breaking out and possibly doing things that are really interesting for us to back. I'm going to leave the floor open. Any final thoughts or predictions for 2021?
I'll just pick up on the last piece, which is I think India has always been growth versus profitability. I think it's the first time that the economics is working. So I'm hopeful, hopefully one of our companies, but I'm pretty sure one of the companies in the ecosystem will file to go public. I don't know exactly which one. There are a few candidates. It does depend a little bit on this dual listing regulation that comes out, because I think if that comes out the way it should, which is no dual listing or 3 years time frame given, then you can have a bunch in an overseas list. And I think that would complete the whole startup, the cycle. The cycle starts with angel investment and generally ends with IPOs, not M&As. Right? The maximum value comes in IPOs. So that would be something, and I think it will happen this year. Something like that.
For me, one of the biggest things that we discovered is work from home and the productivity of work from home. I think this year we're going to discover the other side of it, which is actually the lack of mentorship that it has led to. And given that the entire startup ecosystem is very young professionals who are sort of starved for mentorship, and I read this quote that young people want to go to a place to discover, people to hang out with, to discover people to date, but mostly for peer mentors as well as leaders who can sort of mentor them. I think there's going to be a big emphasis on that because people are going to realize that the talent was maybe highly productive last year, but are not stepping up to the plate today.
Yeah. No, just double clicking on that, I think at least my own personal journey was loved work from home. to begin with. Loved the flexibility, loved the sort of savings on commute time. But I think maybe, I don't know at what point in time it happened, but I think 4 or 5 months in, I was like literally, I think the monotony of just the same routine every single day. And I don't know if you all saw, there was a paper yesterday which had this term, which is, I think it's called fire band or something. It's a German term, which basically says that there is a distinction between home and office. And generally it is the commute, the change of clothes when you go home, and it's a mental sort of reset, right? Just some of the small things, like literally just driving from home to work, and it just refreshes you. So for me, I think this year is going to be much more about hybrid sort of this thing. We all will come to the office, continue to work, the way we used to. But I think we all have also understood that the balance of being more productive on certain days, doing certain things that require more thinking time, require more personal time. So I'm actually happy that I got to experience both, and hopefully we'll find what works best for me.
So when you're stuck for 2 hours in Bangalore on the roads, you'll be saying this is part of the.
Yeah.
No complaints.
No, but even what Vikram said, I think we had one email going around, WhatsApp going around a couple of days ago. I think we have also understood the value of some of these, softer, casual sort of, corridor chats or water cooler chats, and just how young people require some of that. We all require some of that. Our founders require that. So honestly, I'm looking forward to. It's been a year of grueling, exhausting Zooms. So I'm looking forward to meeting people this year.
It's been fun doing this with you all. We'll see how many of these predictions come true in 2021, and look forward to catching up on this in a year's time.
We just discussed. Don't go back to the original forecast.
I think this was in the Scott Galloway podcast, which was predictions are useless, predicting is useful. So this is the cathartic value of prediction that we have done, and then we'll figure it out.
Excellent.
Thank you.
Thank you.
Guys.
Thank you.
Thanks for tuning in. For more Matrix Moments episodes, you can head to www.matrixpartners.in/blog. You can also follow us on Twitter, LinkedIn, and YouTube for more updates.